Hello, good morning or good day, depending where you're joining us from, and welcome. Thank you for joining today's webinar, the second and final of the two-part series led by the BATH Future Leaders Class of 2025. Uh, and uh, sorry, this marks the first time the BATH promotes a Future Leaders sessions after the graduation and the Global Annual Meeting. For the smooth running of the event, all participant microphones are muted. Please submit questions at any time via the Q&A panel at the bottom of your screen. Our presenters will address them at the conclusion of their remarks. This session features two project teams, accelerating cross-border real-time payment across major corridors and identifying and countering new AI threats vectors for trade finance. But before we begin, we will screen a brief video entitled Where Are They Now?, compiled by the project team that analyzed the nearly 300 Future Leaders alumni. Thank you for your participation, and let's start with the video.
So Rita and I were at a dinner. We were sort of sitting in an area that was a little elevated above the rest of the room. And one of us said to the other, there is a hell of a lot of gray hair in this room.
And I said, but the global transaction banking future really depends on the future leaders that comes after us. So we have to do something about it. And Craig said to me, well, why don't we form 30 under 30? And I said, bingo, that's a great idea.
So that was where this came from. We said, how can we, BAFT as an industry body, help our member institutions to make this business more interesting for the next generation? How can we help support our members, support their individual development? And that became the origin of the Future Leaders Program. 10 years later, here we are. I would say my goals are, one, to make sure that our members are happy that we're supporting the development of their future talent. Second is, I'd like to think that we can help that generation build a network that's going to help them succeed as they go through their careers. And third, very selfishly, is I'd love to see these people, 20 years from now, 30 years from now, being in love with BAFT the way our members are in love with BAFT, who have been doing this for quite some time.
So what I found fascinating was being surrounded by like-minded, ambitious, and interesting people. We all had so much in common, yet very diverse in our perspectives. I couldn't make it through the lobby to my room without meeting so many friends from the prior years. So absolutely, I've been so privileged to make friendships that have lasted a decade plus. I've found myself sitting across my future leader alumni friends in many business meetings in various parts of the world. Some of the skills that I hope that the many classes post my graduation and in the future glean from this program is find your people. Surround yourself with successful people. Seek out mentors, seek out the peers that will grow your own network.
My experience in last year's Future Leader class helped me develop as a leader. I was able to stand on my own 2 feet and to be able to drive initiatives within the bank. As a result, I wanted to contribute to someone's journey through the mentor role, and I sincerely hope that I have positively influenced this year's class of 2025.
are multiple reasons why I love working in the transaction banking industry. I loved it from the first day I joined, and I still love it today. Every day is different, so it throws up its different complex challenges. Being in the sales side of things, I love closing a transaction and the buzz and the feeling that gives to you. And finally, just the people. It's great to see them at industry events such as BAFT, and that really does make the difference.
For me, the most important part of BAFT is the networking, and it's the community you start forming afterwards. The amount of connections and visibility you get, I think that's the best added value of the program.
I have excellent memories and still in touch with some of my team members actually in Asia, because actually one of them is in Singapore and the other is in Hong Kong, and I'm still sometimes having a look at what we wrote, because they are still very relevant information. We're dedicating time and time of experts, right? Like people specialized in transaction banking to explore topics that were not necessarily mainstream at that time.
Sky's the limit, right? And the future of the program, as I said, I'm great to see that it's still happening. That people like you are participating, that the brightest are participating into BAFT Future Leaders program. It's invaluable, the experience you will get, and so I wish you all the best on your future journey.
So we started to talk about what are different organizations doing to help not only build a pipeline of talent and leadership in the industry, but what are we collectively doing to try to make the industry interesting for people who at the time were seen as being much more interested in going down a technology track or fintech companies and things of that nature. The pandemic obviously was difficult for everyone. We had to really rethink how do we do everything. And so the Future Leaders Program, one of the benefits of it is that it is largely virtual. So we thought we could continue to deliver the programming, but the difficult part for those, I think, 2 program years was that they weren't able to meet in advance.
When I went through the program, our topic was my biggest challenge. We were looking at distributed ledger technology and transaction banking applications. And the most important takeaway from that experience was that I wasn't there to challenge or disagree with my cohort. I had to challenge myself to look for meaningful solutions for our industry. Another significant takeaway was being open to challenge and being able to accept that my personal views and opinions can and should be challenged. Being flexible when warranted, conscious of impact of how my perspective can hinder or foster finding the right solutions.
So the person to be motivated. Transaction banking within FIs, it's about expertise. So future leader must show that they are experts, they can share their expertise, they can bring a better expertise listening to the others. So technical expertise is one key goal from future leaders.
The most successful companies will be those who can train young people who are starting their careers and figure out ways to build team morale when people are now sitting globally and may not be together in a way that we were traditionally.
A good balance between understanding the underlying flows and what the business is all about, but at the same time also has got deep knowledge with regard to the technical side.
It's about more bringing people together and making sure that everyone feels valued and encouraged to share their ideas.
I'd like you to be ambassadors of BAFT and ambassadors of the program.
Over the past decade, the Future Leaders program has built a strong foundation. Now we look to the future. We have asked the leaders of today and tomorrow to give their views on the future of the program and the transaction banking space in one word.
Exciting.
Expertise.
Sustainability.
Better.
I would say inquisitive.
Limitless.
Community.
Promising.
Engaging. Fun.
Go for it.
Thrilling.
Can I take the opportunity to just pass a message to all of you in the Future Leaders Program for 2025 and others to come? My strongest recommendation to all of you and your senior executive sponsors is to fully embrace the opportunity to be a member of the Future Leaders Program. You will make a difference at a personal level. You will change your career, guaranteed. And collectively is the future of the industry. So take it serious, because it has that potential. All the best.
Thank you. And now if the RTP team can open your cameras and start your presentation.
All right. Warm welcome to this presentation about cross-border real-time payments. And before we jump in, we would just like to extend a warm thank you to our mentors and our sponsors and our future leaders for providing us with feedback and guidance along the way. So Dan, you can go to the first slide. All right, you can leave it here. So let's start. I will take you back to where you can say the emphasis on cross-border payments really started. So back in 2020, under the presidency of Saudi Arabia, the G20 decided to emphasize and prioritize the development of cross-border payments. And together with the Financial Stability Board, or the FSB, they created a roadmap with very clear targets for where we wanted to end up or where we wanted to be by 2027 in terms of cross-border payments. And we will come to these targets very shortly. But just to mention, in terms of the roadmap, it was built on 19 different building blocks that was divided into 5 different focus areas. And I will not bore you by going through all the 19 building blocks, but I thought I will give you a short understanding of the different focus areas that was created to give some type of clarity on the areas that called for change. So the first focus area was to create a joint public and private sector vision. And this is very important, to have the public and private sector to work together towards a common goal. And then we have the second one, that is to coordinate on regulatory frameworks. And the third one is to improve already existing payment infrastructure that we have today. And the fourth one is to make sure that we increase data quality, because better data quality means more efficiency, more straight-through processing, and so forth. And the last one, the fifth one, is explore the potential of new payment infrastructures. And here we are talking about CBDCs and so forth. So now that you know that, like we said in the beginning about the targets for 2027, you might be curious about what those targets that was created back then for 2027. And on a high level, you can see it on this slide. So Daniel, if you move forward, you can bring out the whole slide. Perfect. So you can stop there. Perfect. So basically, all payment service providers should be able to credit 75% of their cross-border retail and wholesale payments within 1 hour. And the global average cost for cross-border payments should not be no more than 1%. And as you notice, I've been talking a lot about cross-border payment, but our project goes a little bit deeper than this because we are talking about accelerating real-time or instant cross-border payments. So before handing over to my colleague, I think it could be good for you to know where we are today in terms of instant payments. So Daniel, if you can open up the next slide. You can go all the way. And one more, perfect. So I could just start by saying like instant or real-time payments, it's not something new. We have functioning domestic real-time payment systems today in approximately 80 countries, and 50% of these systems have the technical potential to be interlinked as of today. So I think with that being said, a little bit of background, I think I set the scene up pretty good for my colleague Geronimo to take you through the real-time cross-border adoption that we see today in the market space.
Thank you very much, Victor. And if we can go to the next slide. Perfect. Well, as Victor just mentioned, we took a very deep dive into real-time payment systems that are live today, and a few that are already showing strong potential for cross-border integration. We see several examples across the region. In North America, we have Pay and Speed in Mexico, and of course, FedNow in the US. In South America, Pix and Brazil has not only had a huge success in domestic payments, but it's also being used for cross-border flows in Argentina. Over in Europe, SEPA Instant is expected to reach full adoption across the Eurozone by the end of this year. Then we have initiatives like Puna in the Middle East, which are already linked to TIPS in Europe and PAPS in Africa. PPPN is strengthening in Southeast Asia corridors, particularly between Thailand and Singapore. And finally, Nexus, a project led by the BIS Innovation Hub, is trying to simplify all of this through a shared gateway that links domestic payments without needing bilateral integration. So, Daniel, if you can help me with the next slide. So to understand where the biggest opportunity lies, we need to analyze Swift Traffic Watch from December 2024 data, focusing only on commercial payment volumes. So the top sending countries were the US and the UK, and the main destinations were US and China, giving us a clear picture where this demand is at the highest right now. So if we can go to the next one. Perfect. From there, we took a look at the corridor level activity with almost 30% of all cross-border payments happening within Europe. Once we set that aside, assuming SEPA Instant will handle them, the biggest remaining corridor is between North America and Europe. We see high volumes of payments across intra-Asian corridors, which are largely unobserved by cross-border RTP at the moment. So with that, I will hand it over to my colleague for challenges. Thank you.
Thanks, Harold. Hi, everyone. As Harold has shown, Daniel, you can move to the next slide, please. So cross-border real-time payments are no longer a distant ambition. In fact, they have become a very competitive necessity. That said, as you can see on this slide, we still face major roadblocks across these three categories as they continue to stall progress. So first and foremost, on liquidity constraints. Cross-border RTP systems still rely very heavily on pre-funding. Banks will need to maintain reserves across multiple currencies and in different jurisdictions. So this not only ties up capital, but it also drives up opportunity cost. Such a pre-funding model is especially unsustainable for high-value and institutional flows. Additionally, real-time FX conversion is also not universally available across all emerging market currencies, so this further limits the flexibility and scalability. On the second row, compliance. So regulatory fragmentation across AML, KYC, sanctions, and even data privacy rules create significant friction. Furthermore, the incomplete adoption of ISO 20022 and inconsistent API standards across the different jurisdictions further slow transaction processing and also increase compliance cost. Lastly, on risk management gaps, today, decentralized settlement arrangements that leads to a lot of delayed payments, and it also makes reconciliation very complex. Furthermore, geopolitical tensions, which unfortunately is becoming more real and more severe of late, erode trust and inhibit cross-border collaboration. On to the next slide, please, Daniel. So therefore, with that, we feel that overcoming these challenges require a coordinated framework built on the following pillars. Number one, on common standards. So global interoperability demands full ISO 20022 adoption and also standardized APIs. As Geronimo has shared earlier, Project Nexus, it is a leading example of how cross-border payment connectivity can work across heterogeneous systems. Number two, on robust domestic RTP rails, strong domestic real-time systems are critical anchors for cross-border RTP connectivity. Examples like SEPA Instant in the Eurozone, we have UPI in India, and also FedNow in the US, they show great promise. But many systems today remain domestically siloed, and that has limited cross-border reach. Number three, on regulatory harmonization. So alignment on AML, KYC, and even sanctions will help to lower compliance barriers. BUNA in Middle East and also PEPs in Africa demonstrate that regional interoperability is achievable with aligned regulatory support. And last but not least, on number four, on compelling use cases and viable business models. So we feel growth will likely begin in demand corridors, such as India to Southeast Asia, that can be done via UPI and Project Nexus, and also between Middle East and North Africa, and that can be achieved with BUNA. So as fee margins compress, our team also feel that successful models will likely pivot towards the following. Number one, we'll look at more bundled payment services. Number two, we'll see more subscription-based models. And number three, ecosystem plays. Ultimately, those who move fastest on these prerequisites are likely best placed to capture the next wave and lead cross-border RTP forward. With that, I will now pass it on to my father, who will then share what cross-border RTP will be like going forward.
Thank you, Max.
Thank you.
So after hearing about the G20 goals, the challenges that we face, and the prerequisite, how do we move forward? In our view, the core element that will accelerate the adoption of cross-border RTP is to ensure the commercial viability of the solutions, but especially for providers, but also all stakeholders involved. And how do we do that? It's a tough question. First, we need to identify corridors with high activity, but also mature infrastructure that can support RTP, and that also have overcome regulatory challenges. Daniel, you can also move forward. Yeah. Next is to reflect on the way we charge the end customers. We need to implement a more sustainable economic model, especially given the high upfront investment cost for the stakeholders. And we also need to choose the most viable and less challenging route for implementation by focusing on low-value payments and using local RTP systems that can already support RTP and are live, and make sure we use common standards. And after we have all this in place, we can then scale up progressively and make the adoption a bit more global. Next slide, please. So to finish, we will let you reflect on our findings, but all to say the adoption of cross-border RTP will take time given the complexity of the world today that is driven by geopolitical interest, but also we need to keep in mind that each solution is a step forward. Collaboration between stakeholders is key, and this includes collaboration between public and private sectors, but also between banks and fintechs. And at the end, if we can provide a more transparent and trustful environment for the end customer, for sure we think the RTP adoption across the globe will grow. Thank you, everyone. And I will now let my teammates answer any questions that you may have.
Yeah, please submit your questions on the Q&A. I don't think we have any, or if anyone wants to unmute and ask a question, or if anyone wants to team and address any specific topic that people asked, please feel free to address that as well.
So I think one of the questions that we had in Washington as well when we did our presentation, and that can be relevant to the topic, is demand. So where do we anticipate demand will come from? I think this is a very relevant question because, as it was explained before by my teammates, the key for success is adoption, and adoption will come from actual demand. So reflecting on that, and as Hero was commenting on the domestic RTP, we can use them as a reference to see where we will see the demand coming from. We expect that the immediate demand will come from retailers. So, for example, we can see remittances flows as one of the use cases that will adopt cross-border RTP the sooner, as migrant workers are looking for faster, cheaper, and more transparent payment methods. As well, on the tourism side, so more and more tourists are looking to pay on local currency and to avoid credit card fees. So this could be an answer to that demand. And as well, with the fast changing technology, marketplaces and gig economies, the cross-border real-time payments could be a game changer, as there will be solutions for embedded effects. And on a later stage, we see corporates will be adopting real-time cross-border payments. So, for example, on corporate treasury and intercompany transfers, as corporates are looking to optimize liquidity and also reduce their FX exposure. So, in short, as Max was also alluding during the presentation, the demand will be corridor-led and use case driven, basically. And also a very promising starting point will be low value and high frequency flows, where real-time cross-border payments brings immediate value to both the senders and the receivers. I don't know if we have any other questions from the audience.
There are a couple of questions on the Q&A and also on the chat. I'll just remind everybody to please submit on the Q&A. But there's one, is there an ideal cross-border real-time payment solution? And how will the FX be handled?
I think there's a couple of questions that have now come through on the chat. I'll pick up the one on, do you think there will be, because it follows on from what Elena was saying, do you think there will be a consumer push for real-time payments in more exotic currencies, or are these not in the horizon yet? I think given what Elena and Max in our presentation particularly highlighted, absolutely there is demand. We flagged there's a lot of demand on the remittance and low value cross-border payment space. And what we're seeing when we look at the kind of global landscape is there is a growing expectation that instant really means global. So we talked about markets like India with UPI, Brazil with Pix, and when you look at Project Nexus, domestic real-time payment systems have become effectively the norm. So when a user can send money instantly within their country, I think like all of us, they'll start wondering, why can't I do the same thing cross-border and in my local currency? Now, as we highlight in the paper, the challenge isn't a lack of demand. If you've heard from everyone, and just to reiterate, there is demand in the remittance and low value corridor for instant infrastructure. But the challenge is really liquidity, interoperability, and infrastructure. When we look at specifically what the question kind of asks on the exotic side, many exotic currency markets don't yet have the rails or FX depth needed for true real-time settlement. And I think that's most apparent across Africa. Whilst we don't talk about it extensively, it is there in our innovation section. And I think that's where stablecoins start to get quite interesting. Fiat-backed stablecoins can act as a bridge asset, helping to enable effectively near instant transfers, even when the underlying exotic currency leg is still catching up. I wouldn't say it's a silver bullet, but it's a practical step forward, particularly for these remittances, diaspora corridors, and fintech-led remittance flows. So in many cases, I'd say they're buying time, a way to fill the gap. And I think while we were out there in Washington, there were a couple of other questions around, do you expect digital assets or stable coins to replace RTP? And I think our view is they're buying time, a way to fill the gap until full local RTP rails and FX liquidity can catch up. So going back to the question, yes, the consumer push is coming. It's definitely growing, and the combination of these digital assets plus traditional RTP rails are how we would close that last mile.
Daniel, do we have time for one additional question?
Yes, you can answer another one, please.
Okay, great. Because I wanted to touch on probably the question, which is the commercial viability of all of this, right? So if we have to put RTP in place, or the amount of investment that we need to do as banks and also other stakeholders is significant. And let us think on really evolving the traditional business model. So what I mean by that is that a current per transaction fee structure is not scalable for RTP, as mentioned by Max before, and also not really aligned with the G20 goals explained by Victor at the very beginning. So let us think about models inspired by other industries. And I'm talking about Netflix and Spotify, for example. And the question back to you is, would they have been so successful if the customer will have to pay for every single series or movie they watch? So probably not. So the key element here to really make this commercial viable is the subscription-based pricing. So RTP becomes part of a broader financial service package. So let's think about, for example, the Apple ecosystem. So the idea will be to monetize RTP by offering services like real-time FX, transaction tracking, behavioral analytics, and also personalized financial tools, which, by the way, are capabilities that fintechs often lack at scale. Also, segmented offering will be a possibility. For example, freemium models for basic RTP access with premium tiers for advanced features. So this can help drive adoption while generating revenue. In short, we really think that RTP is commercial viable, but only if we rethink how it's packaged, priced, and positioned. Over to you, Daniel.
Okay, thank you. Thank you, team. And now we'll transition to the next team. So please turn on your cameras, and I'll start with the presentation. Bear with me just a second again. Hope the video works well this time.
Se notó que estaba leyendo.
Good morning and good afternoon, everyone. Thank you all for joining. We would like to start by thanking BAFT, our mentors, our sponsors, and our institutions for accompanying us throughout this whole journey this past few months. And we are very pleased to present an overview of our paper here. To start with, we all know that artificial intelligence is developing at a very rapid pace, and we are here to show that it should be taken seriously as a threat to our trade finance business. But before we commence, we are pleased to share an introduction by Todd Powell, our BAFT President and CEO.
Good morning, everybody. Todd here. Thank you all for coming today. It is my great pleasure to introduce the future leaders working on the AI fraud topic.
Yeah, and maybe not surprising.
Good morning, everybody.
Oh, there he goes again. But I suppose the slow frame rate probably adds to the effect. But the video we just showed then was AI generated. It took literally maybe a minute or two to make by a piece of software costing just $29 a month. More generally, the benefits of AI are clear to everybody. It can automate and streamline routine tasks, aid in research, quickly crunch through vast quantities of data, and so forth. Advances have been breathtaking in recent times. Billions upon billions of dollars have been invested into developing and using the technology. They're the same things that make it useful for us, for the public at large, and the rapid pace of development also make it useful for criminals looking to defraud individuals, organizations, and banks.
And also in the video we just showed you, did you realize that the BAFT logo to the left of Todd's head moved when he spoke? To spot artificially generated footage, beware of inconsistent lip syncing, blurry and robotical facial movements, twitchy eyes, mismatches between body language and speech, and no visible hands. Then, as you can see here, as a real-life case study in 2024, criminals used AI to defraud an engineering company of around 200 million Hong Kong dollars, which are equivalent to roughly USD 25 million. An employee in this company's finance department received an email requesting quick action for an important transaction. Then, by making this employee feel a sense of urgency, the fraudsters sought to panic the recipient and make them act without care or thought. Nonetheless, the employee was suspicious here.
Yes, and just to dispel the suspicions, the fraudsters arranged a video call between themselves and the employee. During this call, the fraudsters used AI to generate live video and audio replications of senior company executives that were able to interact with and convince the employee to remit funds to the fraudsters' bank accounts across a series of payments. So in this case, it demonstrates that the technology exists today to produce avatars or artificially generated avatars that can mimic real people in a sufficiently convincing manner to defraud organizations of serious money.
And maybe, Daniel, if we can move to the next slide. And the next one, because we are bringing some more figures to illustrate the magnitude of this threat. According to recent studies, $40 billion per year is the aggregate amount estimated to be lost by banks and customers in the US due to AI-driven fraud by 2027.
Yeah, and the fraudsters typically work in groups, so they're quite they can be quite professional in how they operate, so composed of various individuals that each specialize in different tasks. And tools are fairly easy to get as well online for perhaps just $20 or so on the dark web. And a lot of the time in these attacks, the fraudsters will impersonate well-known individuals, so people who can spur action, who might have the authority to make people do something, and they target those people that have the ability to execute payments. And some experts say that perhaps up to 40% of phishing attempts these days aimed towards businesses employ some form of AI-generated content. And there's another fact: a major social media network removed, I think, just under 87 million fake accounts in the first half of 2024, fake accounts using AI.
And then to go on with the figures, as part of our project, we ran a survey that we share with all of our dear trade finance colleagues concerning AI amongst trade finance business, and our colleague Eric will cover this topic further.
Daniel, if we can just pan to the next slide. Perfect, thank you. So the survey was a global survey. We collected insights from 77 industry professionals working within transaction banking. Respondents were located in North America, Europe, Asia, and Australia. and most respondents demonstrated significant familiarity with trade finance, with the majority actually being well acquainted within the field. The participants held roles across various parts of the life cycle, including operation positions, senior management. We had representation from fintechs as well as client-facing teams. When asked how prepared the banking community as a whole was to face AI-driven fraud, only 3 responded very prepared. And specifically, when we drilled down within trade finance, that number reduced to 1, responding very prepared. When asked if they felt AI would lead to an increase in fraud or financial crime within trade finance industry, half the respondents believed it would. And largely, we believe this view within the trade finance community that it might not be as prepared as the general banking community comes down to some of the fundamental makeups of trade finance. It's a highly transactional business. It often involves many counterparts, some of which likely aren't actually clients of the bank. And there's various physical and digital documents being transacted with and against. When asked to share which areas they believe were most vulnerable to AI-generated fraud, the 2 top cited areas were deepfake impersonations and document forgery. And these have long been the leading avenues for fraud within trade finance. And as a result, banks have already been investing heavily in shoring up their technology and operation processes around these areas to limit fraud. However, the introduction of AI could further challenge these controls and lead banks to reassessing and further improving their measures. And to leave the survey on a little more positive note, respondents generally held even views on the applications of this technology over the next 5 to 10 years. Over half the respondents said it would be equally used as a tool for fraud prevention as it would be used as a tool for fraud. So with that, I'd like to hand it over to my colleague Adele, who will walk us through the LC process lifecycle.
Over to the documentary letter of credit lifecycle and the challenges that AI may present in each step of the cycle. It's quite known in trade finance, fraud within the documentary credit transaction is a well-recognized concern. Common fraudulent activities include the submission of forward shipping documents, invoices for non-existing goods, and altered certificates of origin and such other documentations. Such practices exploits the documentary and reliance of letter of credits, where banks primarily deal with documents rather than the actual goods or the service. Now, we understand that with the introduction of AI in trade finance, this produces both an opportunity and a challenge. While we can accept that AI can enhance operational efficiencies, it can also provide fraudsters with enhanced tools to perpetrate fraud more effectively. For example, AI can generate realistic synthetic documents or create deepfakes to impersonate importers and exporters. And this is going to deceive all parties involved in the letter of credit. Based on our findings and on our paper, there are many potential AI-driven fraud across an LC lifecycle, starting from the very beginning. You can think of from the contractual stage or the contractual agreement between a buyer and a seller, all the way to the settlement of a letter of credit. However, we would like to focus on one specific section, which we believe that it's the most vulnerable stage of an LC cycle is the presentation of documents. I think traditionally the document presentation stage was seen or is commonly known as the checkpoint for fraud. But with the introduction of AI, that checkpoint is increasingly being bypassed. And for good reason. The documentary presentation stage is particularly vulnerable to AI fraud due to UCP 600 under Article 5. Banks are obligated to examine documents, not the underlying goods or service. With the reliance of such documentations, it creates the vulnerability that AI can exploit by producing synthetic documents such as bills of lading or a certificate of origins. And these synthetic documents will appear authentic, and they're very easy to create with a simple click of a button. I think my colleague William mentioned for an application that you might find on dark web for $29. For such applications, you can create such synthetic documents that look like for like to an original document. And With that, I'll pass the presentation to my colleague Abigail, who will talk about the supply chain finance.
Thank you. Thank you, Adele, for the LC cases. Now we move to the supply chain finance. We can see this is a typical supply chain finance left circle, and like LC, ICF can be attacked by AI-driven fraud as well. ICF is usually applied to open account trade, refers to the trade transaction between a seller and a buyer, where are not supported by any banking or documented trade instrument issued on behalf of the buyer or the seller. And the world trade volume have seen an increase in open account transaction over the recent years. Already today, more than 80% of the total world trade volume is settled by open account, and we can see the number is expected to grow even further in the future. Today, we are going to discuss two scenarios here. The first one is onboarding and paying the fake suppliers through the AI-made invoices. The fraudsters can use the public available transaction data to create a fake supplier profile, and based on this, the fraudsters could also use AI to mimic the buyer's communication style, signature, and use deepfake technology to instruct the bank to contact and onboard this fake supplier. And once a fake supplier has been onboarded by the bank, fraudsters will continue to mimic the buyer to instruct the bank to early pay the supplier based on the fake invoices and transactions created by AI, and convincing the bank that these are the true invoices ready for early payment to the fake suppliers. And even the supplier is a real one, there are still ways for the fraudsters to use the AI for trade fraud. In a simpler scenario, the fraudsters can also use the public available transaction data to identify the supply chain finance flows between the buyer and the suppliers. And based on this information, the fraudsters can also use AI for the same mode to instruct the bank, but to change the payment instruction details for the supplier to a fake account. The bank and the buyer may only be notified of the issue when the true supplier raises concerns about their missing payment. And from the two examples, we could see, given the nature of supply chain finance, it can be attacked by AI easily. Now I will pass my microphone to my teammate Carmen for the new threats landscape. Thank you.
Thank you, Abby. But despite of this breathtaking landscape that my colleagues Adele and Abby have presented, it is fair to say that so far, trade finance has stayed out of the storm when it comes to large-scale AI-powered fraud. But why? Because it's old school. Trade finance is about paper documents and gut checks, the feel of the paper, the smell of the ink. And if you add the small ticket size of these transactions and the multi-party dependencies, you have a product that is harder and less attractive to exploit. And this is why, until now, AI fraudsters had looked somewhere else for easier targets. But the game is changing. As the industry digitalizes, those traditional safeguards are fading, and AI is perfectly positioned and perfectly capable to take advantage. And this is the paradox, right? Digitalization is essential, even for fraud prevention, but without secure adoption and proper safeguards, it could become a double-edged sword. In this digital world, AI can do in seconds what it used to take months. Fraudsters no longer need a deep industry knowledge or huge amount of time to study documentation standards. AI can mass generate fake standard compliant documents, map corporate structures, impersonating individuals, and even bypass traditional KYCs and AML checks. But let's be clear, AI is not inventing a brand new type of fraud. What AI is doing is making traditional fraud faster, cheaper, and more accessible. And it's not only about smarter scams, it's also about having more people with the relevant tools to try. And while, as we have heard, the perfect AI fraud, it's available, but it's not perfect. It is not here yet. It is only a matter of time. So that's why the future of fraud prevention won't be humans versus fraudsters. It will be AI versus AI. AI has endless potential, but in the wrong hands, it could put the entire trade finance ecosystem at risk. So we need to get ready. We need to invest in secure digitalization, strong governance, and AI-powered detection. And we need to move fast, because the choice is ours and we need to get it right. And if we move to the next slide, we, as we transition, the kind of worthwhile question is that we are not the only stakeholders in this story. And we are much aware that AI is advancing at huge pace. And while regulation is starting to take shape, the global landscape remains diverse. In transaction banking, where precision, trust, compliance are actually non-negotiable, any regulatory uncertainty can slow down innovation. So to explore where the regulation is keeping pace, I will hand over now to my colleague Oscar.
We're seeing different regions take distinct approaches. The EU has introduced a comprehensive risk-based We're seeing different regions take distinct approaches. The EU has introduced a comprehensive risk-based framework through the AI Act and accompanying implementation guidelines. The US is pursuing a more decentralized, innovation-friendly path. In Asia, countries like China, Japan, and Singapore are each experimenting with models that reflect their national priorities, ranging from strict oversight to voluntary ethical guidelines. Africa is also making strides, with the African Union drafting a continental AI policy to guide future development. This diversity reflects the complexity of AI itself. However, it is critical to ensure that innovation and regulation evolve together, so that AI can be developed responsibly with trust and transparency at its core.
Great. So that was an AI version of our one of our colleagues, Oscar. Unfortunately, Oscar's not able to make it today because he's busy welcoming his third child. But very on theme, we were able to get a backup AI version of Oscar to help. So while AI Todd, which we all saw earlier, was created using publicly available podcasts and photos of Todd, this AI version of Oscar was actually made with a short video sample of real Oscar using the same app. So just imagine if it only took us amateur fraudsters 5 minutes to make this video, what could actually be achieved by professional fraudsters with highly sophisticated tools today? So what can we do to fight against this? So for banks, from the examples we covered today, a lot of the fraud cases that are related to identity theft. So firstly, at a minimum, we believe that banks need to deploy multi-factor authentication. And secondly, as stewards of high volumes of trade data, which can be used to protect against and perpetrate fraud, banks need a secured way to standardize, share, and process data. And so prioritizing trade digitalization initiatives is an imperative. And as banks pick which technology providers to work with or solutions to deploy, they need to ensure they're adopting cybersecurity best practices and have the right AI risk management framework in place. Partnering with reputable technology providers that align with the bank's values and risk management approach will be key. As we all know, with bank legacy systems, it's not easy to change to the digital infrastructure once it's been set. So investing the time to choose the right strategic technology partner will be critical. For technology partners, help banks get there by giving them the explainability, traceability, and transparency that banks need to understand how your solutions can help them, while also operating within the bank's risk management frameworks. For regulators and industry bodies, they need to work together to implement global standards on for trade digitalization, while also ensuring there is a healthy environment for innovation to thrive and with the proper guardrails in place. There are different ways in which different countries are regulating AI, as covered by our AI Oscar today, which reflects the complexity of AI itself. But it also means that businesses operating across borders face a patchwork of expectations and standards. Rather than viewing it as barriers, we do see it as an opportunity for dialogue, collaboration, and shared learning. And the key is to ensure that innovation and regulation can both evolve. As we move forward, we believe that greater alignment, clearer guidance, and proactive engagement between regulators, industry, and technology leaders will be essential to shaping a future-ready AI ecosystem. There are many other parties we didn't have time to mention today, but bottom line is that we all have a part to play. Industry-wide communication, collaboration, and education between all stakeholders in the trade ecosystem is key to ensure we do have an inclusive journey to combat future AI threat through digitalization together. Because after all, our supply chain is only as strong as its weakest link. So thank you everyone for your time. This concludes the presentation part of our webinar, and we will now have time for Q&A.
I can start.
There are a couple, two questions on the Q&A, and there's also one to Adele. If you can address, please feel free.
So I'll take the one that builds off what Heidi was just mentioning, which is what changes are required within the trade finance industry. And specifically, I can answer this more in the context of some of the risks Abigail pointed out within the supply chain finance space. So largely the risks remain the same that they are today, which is around vendor onboarding and bank account changes and changes of this nature, where we don't directly know the counterparty, might not be a full KYC onboarded client of the bank. So this is something that banks have already heavily invested in, but we can use further technologies to kind of accent the controls that we have today. So something I've seen is there's callbacks in place today. Well, there's additional checks that can be performed, which are more proof of life, which can be a video call, which ascertains proof of life by looking at the voice quality, facial movements, how the hands are moving, which can be used maybe in parallel with a standard callback within the open account space. This is something where we're dealing heavily in documents and we need to understand the validity of the documents. So I've seen a push to really understand the source. So if we're using FCR and shipping related documents, receiving those directly from one of the large global shipping providers, getting that 100% authenticity from the source is preferred over receiving that from a supplier within the supply chain. So I think in short, it's about using technologies to further ascertain identities and then getting source level validity where we can, using technologies like API and SFTP transfers to get those documents directly from the source.
You could have time for one more question. You want to address?
Sure, perhaps address one of the questions that was addressed to me, and that is, what are the solutions provided by the banks to mitigate the documentary fraud? I think the solution is not to reinvent the wheel. It's to do better in what we're already doing. And that can be both internally within a bank or an FI, or externally by using external help, such as using the IMB to verify whether such documents are fraudulent or not. And I think the IMB has been doing an excellent job at that. They have some experts there who can really identify what is fraudulent or what is a synthetic document and what isn't. Internally, perhaps it's to have the right people at the right place. From my experience and from what I have seen in the banking industry, documentary fraud normally comes down to people's skills. It's a human error. We do have a number of transactions coming in, and perhaps people are forced to accept, or they would like to process something quickly. But having the right people and the expertise is where you can really detect whether such documents are fraudulent or not. And I think the last thing, and that is something that my colleague Carmen also mentioned, is using AI to combat AI. If AI can create fraud, then AI can also present the opportunity to counter fraud. So that would probably be the next step forward when we have better programs or AI solutions.
Thank you, team. Thank you, everyone, for joining us today. I think we're in the top of the hour. Looking forward, if anyone is interested, these white papers available on the BETH website. And with that, we can conclude our webinar. I want to remind, we also have another webinar tomorrow. If anyone is interested, is in the current state of the correspondent banking and trade finance in Latin America and the Caribbean. With that, we conclude our session. Thank you very much, team. Thank you very much, our panelists and everybody who attended.